Hello, hello everyone, how's it going? How's everyone doing? We'll just swap from one stream to another. How's your trading session been? What's been happening? So yeah, quick rundown of treasuries. Pretty much press the buy button and you win, unless you basically bought the highs. Relatively decent day considering the PPI numbers that came out. Hey JK, how's it going, mates? What is happening with you dudes? Yeah, so really straightforward. I didn't take any form of fades at all today. With the numbers came out extremely better than expected. Uh, you know, just very simply the curve went down. Treasuries essentially goes up. We have ES, of course, then going up as well, and then the dollar tends to be weaker, just as a general rough idea with those good numbers. So you don't really want to be fading. Saying that, I think we made 9 ticks today. We could have bought the value area low here and then just grinded the way up, but I wasn't really wanting to fade into like 3 selling balances because we could have, we could have dumped a little bit more, but it is what it is. Do you do voice every day on Discord? No, I don't every day. It just really depends how my day's going, to be honest with you. Um, I don't do that every day, mate. Some days I like to pop in for, if I can, for like 10, 15 minutes just to see how everyone's doing and stuff. But it's hard to trade. Do that and then stream as well. It's quite a long day. So, and to be honest with you, I like to trade in silence because I've got loads of pings going in my ear for buying and selling and stuff. So that's why I can't stream it because I wouldn't be talking. Yeah, you get stopped it many times. You trading the Dow. And the volume's just absolutely dropped off a cliff here. A little bit more actually in this candle. But again, nothing's really happening. Let's jump into indices. See what's going on. If you guys are watching, say hello. Let me know what's going on. How's your day been? Did anyone catch this absolutely momentous dump here? Look at this 699 clipped in one, and we basically dumperood. Oh really? I don't know anyone that traded Dow, to be honest with you, mate. Mostly UK traders, if they can, they'll probably trade something along the lines of a Eurex product. Oh, I mean everyone trades ES, very typically. But if it's out with that, they'll normally trade something like the Bund, or maybe something like the FTSE. But the FTSE is quite hard to get data and order routing for, to be honest, especially with Sierra. I quite like to trade the FTSE, mainly because if you looked at it, it's a really shit buy and hold index. Yeah, it's a lot more mean reverting than ES, and considering ES is mean reverting, you can imagine if you look at a FTSE chart, just look at the growth. It doesn't grow as much, so it doesn't move as much either. Okay, how's it going? How's it going, buddy boy? What's going on with you, dude? What's going on with you? Just in the midst of butchering your name there when I said that. I thought I had cracked how to let me show you what I mean. So I had these on different screens, right? So I've changed this, as you can see from Treasuries. I have some dollar correlation, then I have the 5, 30, 10, the Ultra 10 and the Ultra Bond. Now I have these on different screens normally, but it's really handy being able to have this in your peripheral, which I've been saying the last couple of days. And in order to do the scaling, you basically, you right click on here and then you go to auto scale the chart, and it should scale it for you, which is pretty handy. So it's quite nice to have it all there. Just as a quick one. This could be quite a fun market on close. I think this is the dump I was expecting, market on close, but we've not yet corrected all the deltas, so we'll see how it goes. It won't be this session, Vincey boy. I finished about 6 o'clock my, so it was about 1 p.m. 1 p.m. I finished. I normally trade treasuries, and obviously trading treasuries at this point is there's not a whole lot of movement. There might be something that pops up around market on close, but at the moment we're just going straight bid. So market on close, based on a balance that comes out, that in essence tells you how much selling or buying is coming in at close, and the market then rebalances out. Do I trade American stocks and bonds in the opening of London session? No, I do not, dude. And very quickly, let me show you why I do not. Okay, so this is the 10-year. I've just went onto the wrong chart. This is the 10-year, right? I'll bring up the footprint so you can see this. Right, so this is the footprint of the 10-year. I'll go to my time that's at open. So, right. You guys can see here that the volume that comes in, right? Now, granted, there was news coming out. This is a 15-minute. Each candle that you're seeing is 15 minutes. So the market opens at say 1. Notice the volume is starting to pick up around then, and then as soon as it opens, we have 142,000 contracts executed in this 15-minute period. Then 56, then 55, then 72. So the volume really picks up, right, for the first couple of hours. If you scroll down and you're looking at you're looking at London Open and stuff. I mean, look at the volume here: 4,000, 8,000, 3,000, 4. There's just not there's just not that much volume. Now you may be thinking that's a lot of contracts, but this is the 10-year. So you want to be trading when the most volume is present in your specific market, because it's typically just algorithms that are trading. And of course here it just went straight line, which is nice. We saw a lot of buying delta come in with really not a lot of selling. Here you can see the negative delta sum. There's only 21 contracts here, negative delta, for this 15-minute period. So that's typically why I don't really trade. If I was trading London session, I would be trading a Eurex product, and I don't like to trade two markets at once. I find that too hard, to be honest with you, dude. So yeah, that's a quick way of describing that. Hopefully that makes sense, dude. So you're waiting for a spike to exit. Spike to the upside. I I'm gonna. Do you guys want to see these bubbles for the contracts are executed? Do you want to see that or not? Because obviously it's blurring the candlestick, but you can see what's happening in the DOM and stuff. Look at the amount of absorption that's happening. If they continually hit this here, a lot of buying delta that's just come in. Okay, isn't that stale information? By the time it comes out, one could look at cumulative delta and see the same perspective. Sorry, what are you referring to, Maku? What would be stale information? Sorry, was that a yes for you want me to keep the bubbles? Sorry. Ah, right. Market on close. Okay. No, so basically that's letting you know what's going to happen at market on close and the market rebalances. If I'm perfectly honest with you, it's just used at a time. So you'll see it today, right? If you've not watched the market on close, at 10 to 4 to about 5 past 4, so 15 minutes, there's a huge volume spike where typically the liquidity is provided for positions to be closed. So if any positions are closed, there's tons of business that gets done because really only something like 3 to 5% of trades are carried over in open interest. Majority of them are closed that session. Keep the bubbles. Okie dokie. But OS, I hope that explained the setup, did, as to why whatever market you're trading, even if you're trading CFDs and FX and you're trading, I don't know, US 500 or US 100, so the CFD equivalent, just as an example, you need to be trading at the CME open times. Not dead on it, but I'm meaning, people that tend to Globex is a completely different strategy to regular trading hours. Globex is extremely mean reverting. There's no direction and volume to sustain a move, and if the move is sustained, it's just the offer being pulled or the bid being pulled. And what I mean by pulled is just they're not putting up a fight. Yeah, exactly. That's what I'm thinking. This is kind of the movement I was expecting, but likely now. I mean, it's quite a world away, but we come down here. I mean, upside. Upside, there's just nothing. There's just nothing in play. So if you are to take a trade here, it's going to be market comes down here and then bid back up. POCs here as well. So you want to see the market. Let's get the pen out so you guys can see. So I think taking a long position up here, you're just asking to get burnt, to be honest with you, especially at this time of the session. And obviously you've got POC here to support it. Now you may be thinking, well, why? Why would you want? Why is it going to dump off? Well, look at this little puppy here. We have 16.7k positive delta today, right? That ultimately needs to close off. There needs to be some sell positions that are closed off for the session, which will probably drive this down to down here, roughly around about here, and then we'll ultimately get we'll then get them to get to close their positions, and they'll probably then ride it back in. This is Maku where the liquidity comes in for market on close. It provides liquidity for this to be zeroed out. So that's pretty much where we're at. No problem, dude. I'm glad you enjoy it, my man. It's been quite a long day today. Had a pretty chilled out day today. The only thing I was a bit annoyed at, I didn't take one specific trade, but I mean, 9 ticks on the 10 year. I can't really complain, to be honest with you. Also, you can see all this buying that's basically congregated round about here, right? So we've had a big surge that's come in, and you can see thousands, probably a couple of thousand contracts is absorbed. We're at the value area high, and there needs to be thousands of contracts closed before close of play, which it comes in. There's another hour, mind you. Yeah, it's another hour and 6 minutes till the volume starts to pick up. Notice how the VIX dropping and the book is thicker today. It's not as jumpy, so ES is back to, I wouldn't say normal, but it's a different flow. And this is when you're utilizing order flow, you get to see the change in just how the book reacts to each other, how buyers and sellers react to each other. As before, it was basically doing this, um, whereas now, you're just seeing a continuous sort of grind. The book is thicker. It's just different. I prefer this type of action, not this nonsense where there's no pullback. Don't prefer that, but I prefer it when it's just a little bit more steady. This is, it's more like bonds. I mean, it's not really like bonds, but the comparison to what it was last week is completely different action. If I had to trade the Eurex product, I would pick two of them. I'd pick the Bund and pick the Eurostox 50. That would be the two. And I would use the Bund, Bobble, and Schatz for correlation. And then if I was to trade the Eurostox, I would use the DAX for correlations. I've been toying with trading that for a while, but I've traded the US session for so many years that I don't really need to come alive and execute till 1 p.m. my time, whereas if I was to trade Eurex, I would need to have done all my prep, ready to rock and roll for like 8 a.m. A completely change in structure, and then I would have to. I could only trade one market because there's no danger I'm going to be able to execute one market, two sessions, sorry, and multiple markets. To be honest, if I'm in a specific session, I only really like to execute one market, and by one market, I should say asset class. Like, if that session I'm trading indices and stocks, I'll trade that. But the Euro stocks is much thicker these days. It's probably a better trade than what ES is. It's like what ES was before COVID. Jay, are you talking about for ES or for treasuries? So ES. So if it was last week's volatility, I would probably say 20 ticks, to be honest. And if it's this type of volatility where it's a bit thicker, I'd probably go with like 15. To be honest with you, that's what I would go for. But the minimum I'd be looking to take out of a trade would be 8 to 10, and basically manage the trade accordingly. I wouldn't just take a hard stop every time if I don't need to. My absorption provides you luck. No problem, dude. Hopefully it does. I mean, we're definitely seeing tons of absorption up here. I mean, we could have another little whack above it to have another stop run. I need to check if this MBO up here is real or not. If this is the algo, it's going to be the, yeah, it's the algo. Cloud algo. But yeah, Bonaj, you have a look at the Euro stocks and you just see it's a completely different product to ES now. Kind of the same properties in terms of mean reversion and stuff, but it's just you're going to spot absorption over one tick, like icebergs in one tick. It's whereas ES you have to train your eyes differently. No problem, Jake. Actually, I'll caveat that when you're first starting, and you need to get consistencies. Just have a fixed order bracket. To be honest with you, because when you first start with order flow, you don't really know what is good behavior and what is bad behavior. To be honest with you, right? And that's being completely truthful. And the trouble is, if you start dynamically managing a position, you end up getting yourself in hot water. So I would always advise, to go with a standard bracket and then work on it. Because realistically, if you say, right, I'm going to dynamically manage every trade, you'll end up, just making bad decisions. I'm saying that from experience. You need to get really proficient at what you're doing before you can start dynamically managing things. Oh, come on, I've been trading for over 10 years, dude. Order flow is the... Well, here's the thing, right? It resonates with me, but I can tell you that any trader that's been in this game for many years is using some form of order flow tools, right? And it's what big funds are utilizing to get into positions. Because when they say right, we want to buy S&P, right, and we want to buy 50 million, for example, they don't have the same problem as you and I, right? We need to go direction, we're gonna have no problem getting filled. These guys, ultimately cannot get filled in their position, right? They're never going to work an order. They're never going to go in and buy 50 million in one go. They're going to work that position out, right? Like, that should just complete logical sense, of course. So with that in mind, this is where you get to spot the absorption and you see them working out different levels. So a lot of this, the sad part of it is, what I'm going to say is there's not like, you continually come into the live streams, you'll gradually pick up nuggets that resonates with you and allows you to sort of put into your trading. And that's a specific reason why I don't teach a quote unquote strategy, because there is nothing extremely complicated what I do. On days when the flows are very much to the upside, I'm talking about treasuries here, for example, flows are to the upside, the whole treasury market is going up, I'm only looking to buy, and then I essentially look for correlations across the board, and then look for different order flow tools for how that works. But that comes with time. I can look at a market and see, is the limit in control, is aggressive orders coming into control, what's happening in general, and you just gain it over experience. But now that you're using order flow, and then you're thinking to yourself, well, everyone probably starts with basic support and resistance, right? Let me start with a naked chart, and oh, the market's bounced off this level 4 times. Let me just buy it because it's bounced. It's bound to bounce again, right? And then it blasts through the level, and you're thinking, well, okay, it didn't hold. And ultimately, order flow gives you the key to be able to determine if certain support and resistance levels will hold. And the reason why sweeps are a thing is because game theory is part of the market, and people need to get filled in positions. So I'm just talking as an example, right? Say this is the high, and you were looking to get short here, right? The market comes up here. There will be people who just be, all right, there's support here, we'll just sell, and there'll be some other random indicator like an orb or a pivot, or some sort of indicator here that will say, all right, the market's going to stop here because I've seen it before. So they take a short position. But on the contrary, I can tell you from watching charts for so many years and watching order flow, the market will never stop right here. It's always going to take the liquidity up here, right? Because people that bought this market up here, they need size in order to start getting out. So they need to start working the offer up at these positions so that they can get out of the trades. But if you don't know about order flow, you would just say, all right, the market's coming to a resistance point, just let me short it and do this and then have a stop or whatever. You know what I mean? You're just blindly trading if you're doing that. Been meaning to learn how you learned. Just been doing it, mate, for many, many years. I've never had like a mentor or anything like that. I've never taken any courses or anything along those lines. If you can imagine, if you've been watching charts consistently for over 10 years, it's a long time. And realistically, there is no chance that you can do this for 6 months. And I'm being completely blunt here. This is the harsh reality of trading. There is no danger that you're going to be able to do this for 6 months and be able to absolutely crush the market. You've not even been through different Fed easing, tightening cycles, different liquidity cycles. I mean, we're actually getting through the ringer at the moment with order flow. The market is changing week to week at the minute. So, you ever heard the grand old saying that people are profitable for a few months and then they end up burning out, and that's just because cycles change. You need to be able to adapt and change to things. And first things first, you need to actually even understand that the market does change. How do you know the market's changed? I can tell you, until this guy disappears, we're in this current regime, this ghost algo or cloud algo, whatever we want to call it. If you guys bring up any other heat map tool, I know that Bookmap has got something to take these away, but this is now completely different. They're not showing their hand on the bid or offer anymore, right? They're not printing out liquidity anymore. Basically, they're only showing a certain amount and they're just iceberging everything. So completely different. Whereas if you go back, like, I don't know, 6 weeks ago, they were printing, 100 here, 100 here, 100 here. That was actually pretty real. Ignore this because this is not real. Yeah, exactly. You were saying that, dude. Hopefully you lost the farm, Cloud Algo guy. Hey Lumen, how's it going, mate? Exactly, Maku. So you always, Jay, you always use a hard SL and TP since started to practice order flow, footprint and DOM. Started to manage my trades more often than not, cutting early and hit my SL. It's been a right decision, but then again, cutting early, TP hits. But this is it, mate. You need to journal that. You know, you need to know that. Did you make money? Did you make more money by cutting early and micromanaging the position, or did you make money just set and forgetting? Until you get proficient at order flow, until you understand what's good action and what's bad action in favour of your actual position, you're better just to drill out a sample size and work it out, mate. You don't know what you don't know until you get some data and run through your own numbers. Exo, hello. Jag, I hope they did lose some money today. It'll maybe try and stop them from doing what they're doing. Hello. Why can't you see these orders with Rhythmic level 2? What platform are you using, dude? Alex, what's happening? What's happening, dude? Yeah, it's an absolute snooze fest. I mean, they're literally. I mean, look at the amount of absorption here. I want to see if this end of this session, if they can basically kill this delta. We've got 18k delta that'll need to be closed out pretty quickly. So let's see if they do get a nice juicy pullback. We have POC to contend with, and then ultimately a sweep down here. It seems a world away at the moment, so I don't know if we're going to get that far. We could just consolidate around here, but I do think some of this number needs to close out. So we'll see how that plays out. So using Sierra, okay. Do you have package 12? You need package 12. And then if you watch the configure the DOM video I've got, I think I run through the MBO data on there. Yeah, there's a couple of videos of live execution on the channel, mate. I think there's two videos on there. Oh, you caught 11 ticks in the Boond and then 7 ticks in the Ultra. Well done, buddy boy, well done. I took 9 on the 10-year today. No, you don't need to have Denali, mate. You can have Rhythmic. But you need to have package 12 in order to support it. And then you need to put in your... I'm assuming you're using a prop firm, right? So you, to be honest with you, just get Denali data feed. I wouldn't even bother going to the hassle. If it's Sierra is basically their system is they've built their system to work better with their data feed. You know, you're gonna, but if you don't want to do that and you can't open an account to get Denali data feed, or you don't have a live broker account, you can get level 2 with Rhythmic. You need to put in under your trade data. You need to put in all the correct data. Make sure you've got level 2 with the Rhythmic or the prop or whatever way you're using it, and then you need to turn off support for Sierra chart data feed. How was the Boond today, Alex? What was the range today in the Boond? It was 23 ticks in the 10-year. This is just a continual grind. Let's see if they do hit it above here. See how thick the offer is. Like there's, you know, they're not making it easy for buyers at the minute. You know, every tick is up there. There's 339 absorbed in the offer. Well, it's part of it, but it's a good question, Maku. So MBO basically, in a nutshell, just shows you the queue positioning. Um, there's a few data feeds I know that Denali and Rhythmic offer it. I can't tell you about interactive brokers and stuff and IQ feed and whatnot. I don't know if they offer it. I would want to say potentially yes, but anyways, your platform needs to support it. To be honest with you, MBO data is not until this regime changes in ES. MBO is not very useful right now. Being completely honest, until this cloud algo goes. So it's like 60 ticks if the US session is taken into account. You traded the European session where it was very tight, like 20 ticks. Oh wow. Okay. Okay, so it was like 20 tickaroos tight. Okay, here we go. Here's the pool. Let's see if I can continually hit it. The bid's just been pulled. Do you guys see that? So market just moved down there like what's that? 10 ticks to here. Note the amount hitting into the bid: 59, 28, 85, 59, 96. Nothing, right? And note there's absolutely no selling that's just come in to do that, so they've just pulled the bid. Watch them continually pull it. Let's clear, and you can see that because it's as clear as day. This is the current regime that you're in the market, and you need to get used to it. So notice how they pull the bid, and then they get to a level, they basically iceberg this, and then they start thickening up the bid. But they've just literally pulled this to pull down 15 ticks with no real selling. Now you want to see sellers actually start hitting in. Okay, here we go. Here's the dump that we're talking about. We want to see the bid be pulled and then continually smash it in. We need to break POC first. That's the first level to contend with. We got out the Mr. OrderFlow crystal ball. Okay, so watch here. We need to first clear off point of control. First level of contention for sellers. Hopefully we do not just fluff around here. We want to see some pain. There's going to be an absolute plethora of stopperoos below here. So this is the first target. Take this out. It's not very long before we get here. But we need to break POC first. That's the rule. I would like to see more selling coming in. And ideally they do not thicken up the bid, to be honest. I would rather they just hit in and we can get some action here. If I had to trade NQ, what would I do it? I wouldn't trade. Personally. I would I wouldn't trade. That market for me is something that you fling on a couple of micros, trade longer term structure and hold the thing. I've got no edge in NQ with the order flow. I mean I trade bloody treasuries for goodness sake. I think Daniel that's in here, he trades NQ, so he's probably your man to ask. So thicken up the bid. So do you notice how the bid was really thin? They pulled it right on the way down here. Do you know we ran through that? Thicken up the bid just means that the buyers are putting up some fight, you know, and they're thickening up the bid and not letting price go down. Because what we want to see here, in order for this to capitulate, we need to see sellers starting to come in aggressive. So we need some negative delta to start coming in, right? Which is either going to be fresh shorts executing or these guys closing out their positions to basically get roughly zero on the day. And then when the market is doing that, we want to see the bid be pulled. They're the sort of two components that you want for an absolute grand dump down here. Because if the sellers get aggressive and the bid remains thick, and they basically absorb the selling, then we're just going to faff and finish around here. A POC. Hopefully that makes sense. I suppose, dude, you could use a footprint. That's something that I never really thought about. But trading NQ on the DOM is what's something. I don't know. Now you're making me think about it. I would probably, you need to have an NQ DOM that is massive, so you need to like turn your screen vertically for NQ and have a really stretched out DOM. It might even be worth maybe compressing it to 2 ticks rather than 1 tick. You're going to need to use some footprint in there, something along those lines. But I can't give you any sort of context and tips for that because I don't trade NQ. And also what's hard with NQ is it's a hard market to scale. Like if you're crushing it, it's a hard market to scale because look at the size. I mean, there is none. I mean, if you come in right now and hit 5 contracts, you're going to take out like 2 prices. It's ridiculous. Yeah, no problem. I mean, you'd probably do some tick compression, but if I'm perfectly honest with you, I don't know. I would rather buy a long-term ETF than trade NQ. If I'm honest with you, it would be too stressful. There's like going from one extreme to the other. There is the 10-year that sometimes moves 10 ticks in a session to then NQ. You know, I was going to make a joke there about narcotics, but I've realised it's YouTube, so I can't. I was going to compare them that way. Uh, I'm not good for this whole PC game. You know that. Politically correct and all of that. Yeah, if you compress it to 4 ticks, it pretty much just makes it like ES, to be honest. Jagger, what are you cooking? What's on the menu? It's an extremely, extremely shocking product is the Dow. I find it absolutely astounding that the Dow is so thin. Yeah, it's like 30 of the most well-established countries and sorry, the most well-established stocks in the US. It just absolutely blows my mind that it's that thin. That could be a really good product if it was thicker. Yeah, exactly. No one trades it now. It's shocking, but it could be it doesn't make any sense to why it's so thin. So you're making chicken rolls with mozzarella inside the oven. Oh, that sounds good. Very nice. Right. I'm going to get the rectangle out so I can zoom in on this TPO. It's kind of annoying me that it's... Jay, yeah, I could do so, mate. I'll do something along those lines. I don't trade oil or gold, mate, and they're about 30, 40, you know, bidding offer, roughly. They're about the same. They're kind of like the same as ES at the minute. So the thing about, you know, crude and oil or gold in general, these markets tend to run, you know, so you need to be on the right side of them. But they do run. The ranges are quite good. Um, and Jade, pretty much the footprint. I mean, you know, there's pretty much three order flow tools that people use and iterations of them. You've got the depth of market that is basically the raw data that you're seeing. So you have market orders, you have limit orders in there. You can chuck in delta in there just as easily spot absorption. You have some volume profile, right? That is, you know, prior to all of the cool swanky tools coming out, that was what everyone had and everyone learned on. Nowadays, you've got things like footprints in there, and um, you've got heat maps. Now, the footprint is only showing you market orders. If you watch that footprint video, a big misconception is people don't take into account that the market, you know, the blue versus red basically works diagonally against each other like that. You can see. So a lot of people don't take that into consideration. So you need to think about it like that. And really, the footprint for me, I just use it to spot delta flows, um, volume that's coming in on that specific candle. You know, just as an example, if you know the market's looking to break a level, you know, and there's no volume coming in, you know, you're going to need volume for that to break and sustain. Otherwise, it's more than likely that it's just going to fade back in. And then I use footprint to spot imbalances. But that's really it. And then heat map, just a different way for you to view the depth of market. To be honest, to view the limit orders. It all depends on your own preference, how you want to look at it. Do you want to use the raw DOM? Does that resonate with you? Does footprint work with you the most? We got some size coming in now. See if we can break through here. We want to see a dumperoo. They're aggressively hitting it here. We want to see this bid disappear, please, so we can get a crash. That would be great. Do you swing trade? No, so I pretty much, day trade, scalp around certain positions, and then I have, like everyone else, money in some crypto for long-term investments and some ETFs that track the S&P. And that's really it, to be honest. Long-term ETF is just to beat inflation. Like, ever since the stock market was made, buying and holding has been the best strategy. So you're saying the volume-based candle for footprints is it better than time-based candles? I would say it depends on the volatility of the product you're trading. So for example, ES, you can probably look at a 5-minute candle because it moves enough for you to spot things, whereas Treasuries doesn't. So I like to look at like a 15-minute, and ultimately you want to have it short enough, see the change in flows and delta flips that happen, if that makes sense. But it's really personal preference. It really depends. Do you want to go for a tick chart, or do you want to go for a range, or do you want to just go for time? Really depends on what you want. But I think at the end of the day, it comes down to the volatility of the product that you're trading. You don't want to have it too much or too little. Lumen, you're a little bit confused about volume profiles. How do I get the optimal range and time window to anchor it? So you want to split them into different sessions, mate. You want to split them into Globex, which is extended trading hours, and split it into regular trading hours. Your extended trading hours of Globex, you're really only going to be paying attention to the overnight high and overnight low, and then their key inflection areas when RTH opens. If you're going to be in a balanced day, then likely they're good to fade those levels once you get sweep. Jay, you're not a fan of heat map. I use footprint to spot trapped traders and stop loss hits. Sure, those can be seen from DOM, but footprint is easy for me, at least for now. Yeah, exactly, mate. And that, honestly, if you're going from candlesticks to the DOM, it's a massive jump. So it's probably best to start with footprint. It's a kind of intermediary to that, just to get you understanding. Because seriously, when you're coming from, okay, here we are. We are done Peruing here. Let's see if we can do it. We can crack this level. Note how we've got the step in the profile here, right? So the market, if we blow through here, should zip through here quite quickly. Then we want to just see there's some thickness traded in here. So if I get my crystal ball out here, we need to see a sell imbalance to come in to crack us through here. We blast through, and then we take a bounce back here from this level, and it comes back up, and sellers absorb the imbalance that was created at here, and then we tank. How's about that? Jay, remove MES from your charts. You need to only look at ES and then cross trades to MES. Do you know what I mean? So you look at ES as the main contract, and if you're wanting to execute MES, just sort it in your platform so that when you take a trade, it automatically does it in MES for you. Don't look at the volume is garbage on MES. Yeah, I advise anyone to just not, when you're doing your analysis and your volume profile and everything, just do not use MES. It's a completely different product. In fact, there's just, yeah, do your analysis and everything OrderFlow related on ES, and in your platform, just I call it cross booking, but cross book it so that when you press buy, it automatically puts you into buy in MES. Simplest way to do it. So if I tried a strategy where you buy with small sizes every time we go to say 3 standard deviations instead of timing the trades, and do you think that's a good idea? No. No. The reason being is something so simple like that. It's 2024 with really sophisticated algorithms and some of the best quants in the world working for Goldman, JP Morgan, Citadel, DRW, and Optiver. If that was a thing, it would be absolutely smashed home. They would be abusing that. Do you know what I mean? Now, the only thing I can get behind for, which I don't advocate anyone do, is NQ is so sensitive, so any form of standard deviation that anything hits in NQ is probably going to bounce off of it, like a couple of points or whatever. But like your standard deviation bands and stuff allows you to know, from a starting block, how out of whack are we, for example. So if you're at, just say a previous day high, 4th standard deviation band, and you start seeing the offer thicken up, you want to be going with that so they pull the bid and then you're on side extremely quickly. You need to have multiple confluences with the same thing. Hopefully that makes sense, dude. So you meant to use footprint with the DOM. Footprint is more to see what happened to some. Yeah, exactly. So you're completely spot on, mate. Gary boy, you're currently starting to learn order flow and have been doing 1-tick drills to get familiar. You're also trading the treasuries. Do you have any tips for you? Keep on doing what you're doing, mate. I would say do your analysis, watch correlations for the markets, and just watch the DOMs. Spend a month watching the depth of the market, 3-4 hours a day. Start making notes. You'll just start to see things, and there is no substitute for doing it yourself. The more you tune into these streams, you're going to see like certain nuggets and you'll pick up things, but eventually once you start doing it yourself, you then realize like, I see what he's meaning there. Do you know what I mean? But you can't put it into context until you actually put the time into it yourself, if that makes sense. But keep on doing what you're doing, mate. I would advocate, if you're just starting, start out on treasuries and a thicker book so that it's just easier way to learn, in my opinion. If I had a group of traders, right, if I was to handpick them and start a prop firm, which I've actually been thinking about this, they would not be trading any form of stocks. Like I would have a team on probably some Eurex products and a team on bonds and notes in the US market, personally. And then if I had someone that's an absolute crusher in ES, then potentially, but they need to be on really tight limits. You know, so take that what you will. I've got no idea, mate, about Ninja, to be honest with you, dude. No, I've got no idea. I've got no idea. It's extremely simple to do on Sierra. Can you guys hit the like for me, please? And also for anyone that wants to support the channel, here is a link for you. You can either do that via YouTube or you can do it via Coffee, whatever is most convenient for you. Get to your question in a wee second, buddy boy. So you're currently using one DOM on the 10-year, which is pretty thick. What do you think is a good time to start adding multiple DOMs? Should I wait until comfortable with one? 100%, mate. You know, here's what I use for treasuries, right? And this is where you need to get good with one, and you're probably thinking, this is what I use for my setup. I have it on one screen now, just to have these in different charts. So this is the 10-year, this is the 30-year, this is the 5, this is the Ultra 10s, this is the Ultra Bond, and this is the 6E. Which on some conversations today, I'm going to toy around with 6S to see if it's any better for dollar correlation. But anyway, when you're going from one DOM to 6, you're going to be like, holy smokes, how do you see that? And the answer is practice. You know, you want to just quickly glance and see, right, if you've taken the next price, is it reloaded, so on and so forth. But when you do get proficient at it, you want to add in the short, middle, and long end of the curve. So the 5-year, the 10-year, and the 30-year. But there's no point adding on 3 until you can read 1, right? And start with the thick dude, the 10-year. Because look at the liquidity difference on the bid and offer. Look how thick this product is. Hopefully that makes sense, mates. So, Freyr, am I pronouncing that correct? How many ticks do you go for on the 10-year typically? Good question. It depends. Now, depends on the day. If the flows are pretty good and we've got a chance of cracking the highs and running, I will take that baby for 10, 11 ticks, and then go and do a victory lap and do like a special dance, right? They don't happen very often, to be honest. If we're in days like today, it was 2 to 3 ticks. If I can get it, I'll get 4. But actually, the trade played out where I was looking to get 4, and some correlations basically pulled back, and then I ended up as soon as the next price was taken, not in my favor, I just got out for the 3, for example. And it all depends. My hard stop in treasuries is 5 ticks. I don't really try and take the 5. To be honest with you, I normally know if I'm wrong, and I'll get out for a couple of ticks, 2 or 3 ticks. But very much so in the 10-year, you can realise you're offside, and then you'll be able to go out for 1 tick or scratch when you're off. Yeah, today. So today I took 9 ticks out of 10-year. Please add your big order to make ES come alive. What do you mean? Do you mean clear the delta? Or you just meaning, do you want me to go and just sling some huge size in the spoos and get it moving, dude? Is that what you want me to do? You try 4. But this is the thing, right? In treasuries, you know, I'm very much where if I've got 3 and then they're ticking up to give me the 4, and say when they're testing it, like say there's 3k on the offer, right? And I'm maybe 2,000 in the queue, and they test the next price, and I'm like, okay, great, come on, just get me filled here. And then I see the 30-year ticks down, so they tick down and go offer. um, I would then be waiting and saying, right, if they don't fill me here, and then they basically clear the bid and reload the offer, I'm getting out for 3. I'm not wanting to watch that come back to scratch. If I'm up 4 ticks, I want to at least try and take a couple of ticks out of it. You know? Hopefully that makes sense. Yes. The more you trade, the more you realise that bonds are a much superior product. It's not about how many ticks we can get during the day, it's about how much money ends up in our account. Well, that's exactly it. And the reason why I say in ticks is because it's to do with the I get rid of the P&L side of things a long time ago, and I typically look at the day in ticks as the way to do it. And I know that if I make I don't I think yesterday I had an absolutely great day, one of the best days I've had in weeks, to be honest. I think I took like 12 or 13 ticks in the 10-year and 5 on the 30-year. Great day. And then today 9 on the 10-year. The tick to commission ratio is that good that I don't need to worry about commissions. I do if I'm getting too trigger happy, but I like to try and limit it to 10 trades a day, to be honest. Yeah, exactly. Let me go and sling a couple hundred contracts in here. That's not even going to do it. I'll need to sling 2k or so. This is garbage action. But see how the selling that's coming in, basically the bid is just kind of absorbing it at the moment, which is a shame. This is what I was meaning by the bid thickening up. So it's just thickening up, and now we're faffing around, which is meh. Exactly, and it's about this. This is the thing. Treasuries allows you to be. It's not the upside that worries me. It's the downside. Because I know if I consistently trade well, right, all the time, I do well. And if you do have a bad blowout day on treasuries, right, and everyone has them every now and then, your job as a trader is to try and limit the frequency that you have them, right, and make sure you've got hard limits in place so that you don't go bananas. But anyways, if you have a really bad blowout day in treasuries, it's not going to be anywhere near as bad as ES or NQ. And I would rather just consistently grind away, taking, I'm not saying I take 9 or 10 ticks every day because I don't. They're good days. But if I consistently grind away, and put in average winning days and average losing days, and I win more than 80% of my days, and I keep the losing days scratch or within a manageable loss over the long term, it's very straightforward. You know, you then don't have the emotional roller coaster that loads of traders tend to go through. Yeah, exactly. You can be extremely accurate, um, I think I need to run through a review of trades. I had one bad trade today, but every other trade was just bang on the money. I didn't take any form of max adverse excursion on them, which was really nice. Yeah, the volume's definitely less. But if you're trading the first couple of hours of open and flows come in well, you're gonna. Ideally, you want the treasuries or the tens to be like a 20 tick range. To be honest, see when it's less than that, when it's like 10, 11 ticks, it's hard. Like they're the sucky days. As another golden rule you can use, which I advocate in ES, wait till initial balance is set. Gives you the playing field for the day. Treasuries respects those levels extremely well. And Treasuries doesn't, go above a level 10 ticks and then mean revert back into value. It doesn't do that. It's a completely different product. The thing is, I'm biased towards treasuries, right? You yourself may look at treasuries. If you've been trading NQ and then you go to treasuries, you will literally, it's like watching paint dry. I mean, can you imagine looking from, what would I say, from 1 p.m. today, right? Treasuries has been in like a 4 tick range, the 10 year, maybe 5, for hours. So, but yeah, so the market is really algo driven these days. So there's always going to be volume in there, but definitely the summer months are least volume. I wouldn't even bother trading treasuries overnight. If you can do that and make money, great. I just find it just not as easy to read. Because what I find is to say you're filled in the bid and there's 50 on the offer, right? Treasuries loves to tick up and test the next price. So, I mean, how long have we got? We've got 10 minutes. Let me explain this so you know what I'm talking about. I really need to program a hotkey to go to the next chart book. Okay, so you notice how it's bouncing around here, right? Maybe go to a thinner one that we're getting it. But anyway, we'll just use here. So you notice that there's 932 hit into the bid and 320 left into the offer. Both the offer and the bid are extremely thick, right? But when it's Globex or overnight session, this is probably at least 50-60% less than this, right? And what I don't like about the overnight session is, so say they've just taken this price and then if they went bid, they'll maybe tick 10 in to check like that. So they tick up 10 and then they'll just aggressively hit the bid, clear it, reload the offer. So now you're saying, okay, the 10 years has just done that. We want to see the 30 year do that, but it's not. And neither has the 5 year. It's still bid. Okay, the Ultra 10s is still bid. You want to see them clear this and also the Ultra Bond. And just as I'm saying that the 10 years went bid. So you want to see when they tick up, is there tons of orders going to be cancelled? And you better believe that when they test up this price, they'll then hit into the bid, and they would do it with like this. They hit one up, they test how strong this is, and then they'll typically hit this and then clear it with some size. When it's Globex and they do this, when they hit some size in that and then pull the bid on the next 2 ticks, it can move a few ticks quite quickly. So just something to bear in mind. It's not going to do that because there's 1,000 waiting on the bid here, so there's some size below this. Does that make sense? So do you see what I mean by the ticking and then hitting in? Exactly, Maku. That's what you need to do, man. Close all the charts and watch it there. And also, you know, say for example, they clear this 4K and then it goes offered. You want the offer to remain thick. You don't really want it to be tons of two-way trade. You want them to clear the bid, reload the offer so it gets nice and strong, and you don't want them to just like tick a few contracts into it and the offer disappears and then to be two-way trade like this, right? This is not going anywhere. Do you know what I mean? And you need to then watch the correlations across the board. We've then got our standard TPO chart up here where you can see the session. This is the complete regular trading hour session. So we have the first 30 minutes of open, then B period is when the PPI data come out. We went straight bid. I was buying about here and just continually buying the way up. And then I think we had a pullback down about here, and I was basically buying the way up. The only trade I regret not taking today was the H period when we went back down to value area low, and there was 3 imbalances on the sell side in the footprint, and we were looking pretty weak across the board. I thought they might bang it through the level, and then I was going to buy it if it got down here as a great trade, and if it did do that, I could have held back into value. But they didn't. It just then basically grinded its way back up to the high, which I was kind of a bit cheesed off at, to be honest with you. Yeah, so that's pretty much the session, to be honest. I didn't trade the 30-year today. I did yesterday. So, but when the market's doing this, when you've got the initial balance, the initial balance is set, you kind of really need some real volume up here in order for them to bang it through, So let's jump back to indices before I blab too much and we miss the action. Use 3 to 5 for it moves really quick, but it's much more readable. So very typically the market is correct, especially in treasuries. I find it a little bit more honest than ES and NQ. And I really pay attention to what's happening on the yield curve because that moves inverse to bonds and futures. What's happening on the dollar. I used to pay attention to ES, but not anymore. I just don't think that correlation is that important. I'm more interested in dollar correlations than I am ES. But of course, you better believe I'm watching the whole curve. I'm watching from the on the yield curve. I'll watch the 2-year, but on the DOMs I don't. I like to watch the basically the 5 to the ultra 10s, 10-year, then to the ultra bond. Typically, as treasuries are extremely correlated. It's hard to explain. So it moved up, I think, about I don't know, 15 ticks or something. Then we pulled back, and I was basically bidding the retest because the PPI data. There's no danger the treasuries is going to go down with that data. It's not going to happen. Like when that data comes out, and it was basically it came out better than expected for the purchasing price index, giving an indication that CPI could be less. It could be a better number for tomorrow or less than forecast. When that data comes out like that today, I'm not taking any form of selling personally. I then want to be buying bonds and notes all day, typically. So the offer's now been pulled as well to get us to here. We're seeing it thicken up a little bit. So do you see that there? How they've pulled this, nothing traded, and then now it's getting pretty thick here. See that? How thick it is? Backticking. Backticking is when you it actually happened when we were saying that. So they tick up and test one contract, for example, then absorb the full amount of the bid, reload the offer. That's a backtick. I actually have a video about that, mate. It's in the playlist. Good question. Yeah, basically, I have some sounds that tell me, when size is executed on the 5, 30, and 10 year. I'm contemplating getting something a little bit more dedicated to it, to be honest. But for example, I have a ping that tells me when more than 100 contracts is executed on the bid and offer on the 10s, 50 on the 30 year, and above 100 on the 5 year. The only downside to it is, as you can imagine, it gets pretty hectic when the market is busy. It's the only downside, but it kind of keeps me focused a little bit. We are absolutely mooning. It's okay. There's a stop's been hit. This is the last chance saloon for sellers now. So they ram this. Look at all this delta coming in. Jeez, oh, we've got 1 minute till this comes in. Last chance saloon. If they're to hit this now is when they need to start closing off some of this delta and for us to work our way back down. Otherwise, we're just going to continually moon. Also, with the VIX dropping, it's not exactly ideal. Should be fading as well. You can see how hard the bid is starting to fight there. You're seeing hundreds of contracts absorbed in the offer. Yeah, I've thought about that, mate. I've faffed around with price squawk a bit, but it's does anyone use price squawk? Does anyone get any good templates that they can send? Because honestly, looking through that in depth, I've used it and it's not the smoothest software. Wait, Daniel, do you have some configurations for that? Here we go. Here's the pullback that we were long waiting for. I want to see us crash and break through here, but we're going to struggle to break POC, to be honest with you. There's no danger they're ending the session at 23k delta, that's for sure. They're going to need to close some of that out. That's the spike you're waiting for. Nice, dude. I mean, I would be a little bit conscious that this is right here. I suspect now that we're probably just going to do this. But you never know when the data comes out in the next, we've got algo time in the next 9 minutes. I know, if you get any idea how to set that up, I had a look at it, if I'm honest with you, and I don't know, I'm kind of scarred for Sierra. It's hard enough to try to get that to work, other than... Do you know what would be great? If someone in this trading space could just develop something with a decent front end. Why is everything like built for developers? No one's literally thought, let's get a front end developer in and actually make the thing look nice. Am I being harsh? What's the financials? 10 p.m. to 1 p.m. PST. Time Asia Open. Wait a wee second, that's like Eastern time. I need to work out what these times are, dude. For me. Yeah. Yeah, no, I agree, mate. It all looks like 1995 software. I mean, even all of the routing platforms are shocking. Yeah, exactly. And this is the thing that's missing on Sierra. I mean, I love the platform. I think the guys have done a great job, but it's you know they need to make it a bit simpler. It's the same. There's absolutely no reason why that price squawk and stuff like that is such a stupid user interface. Do you know what I mean? Not that I'm being really harsh here, but like these things should be fairly straightforward. You go in, you select what sizes you want, you connect it to your time and sales or whatever, or they just have a time and sales, you select your data feed, connect it in or something, it should work that way. It shouldn't be super old software. Yeah, exactly. I've spent years in this platform, um, and it's kind of like a love-hate relationship. I find it quite rewarding as a platform to use. Um, let's clear this delta. Wee second. It's just so bananas that I've lost track of what's going on. Um, yeah, it's just a really difficult platform to use, you know. And I get these guys are really whoever made it is clearly an absolutely dynamite developer. I mean, hats off to them, right? But for goodness sake, man, make it a wee bit more front endy, or at least have YouTube videos yourself on, not just hand someone a 55,000 page document and say good luck. Yeah, exactly. I mean that dude's literally made himself a career out of making making Sierra easier for people. This is brutal action now. JK, I'll see if we. I mean, I wouldn't. I don't know. CPI data tomorrow um, will be interesting. But it looks like the market's ready pricing in a good number right now. But we'll see. Sell off and overnight. CPI number comes out as expected to be, better than expected, and then we moon. Yeah, I would say Jigsaw, just from watching it, it's slightly better in a few departments. But then, I don't know, do you not need to buy a Jigsaw package and stuff? And to be honest with you, like for the price that Sierra is, you've got the absolute. I've got MBO data, full L2, absolutely everything I need within trading in one platform, and it's like $90 a month. Do you know what I mean? It's not a lot at all. It's like a round of drinks. It's ridiculous. Look how thick the ES is now. See that? See how they're thickening up? Okay, it is interesting. It's completely different. Look at the difference in the thickness now. Wow, they're just absolutely gobbling this, aren't they? Just lifting it off for reloads. One minute remaining. Yeah, it's a good point, Anthony. Hope you're well, mate. They definitely do. You know, as if the world was ending on the news. Okay, they hit it. Let's see if they do sell off now in the next 30 seconds when this data comes out. Well, not data, just algo time. They're definitely going to have to take some profits here to end the session. 5 seconds. Here we go. Yeah, exactly, McCoo. It's a completely different product. Now, see, we can work our way back to POC now. But definitely some profit taking needs to happen, I would say here. I've got a couple of minutes left for him to do it. Oh really? Wow. So it's literally just a DOM. I didn't realise that, man. Yeah, that's the really common way that people do it, mate, is they go for Jigsaw, DOM, and then Sierra. Yeah, exactly. Exactly. It doesn't really matter. If you can make money, it doesn't matter what platform you're using. Exactamundo. But yeah, let me know if you guys have got any other variations of like price squawk. Is there not other competitors out there? Is there not like a nicer web platform or something you can use? I mean, I recommend TickStrike for equities to listen to like Apple, Nvidia, you know, the Mag 7s, but not so much for treasuries because I want to listen to the individual sizes and program it rather than just a voice that tells me, you know, ZN buy, for example. You like RT, but it's flaky. What's RT? Am I being a potato here, Frere? Vesta RT, is that a competitor to Price Squawk? Linsoft. Okay. Yeah, is there anything out there apart from Price Squawk that ideally a web platform that can do that? Is that a thing? Oh, it's a competitor to Sierra. Okay. Also, Sierra kind of cut off the ties with Price Squawk. As far as I'm aware. Yeah, Motivewave is probably the best Mac platform if you've got a Mac, to be honest. Yeah, user friendly is the thing that Sierra is not. Like literally every single thing you see on Sierra here is a setting. Like I'm not joking when I say that. From the color of a box to how many decimals are on the price to how big the numbers are in the DOM to the colors, the colors of the volume profile, even to this little title here. Yeah, and it's all additional settings to have labels on your chart as well. So yeah. Ah, right, yeah, the market pulse thing. Sweep, book pressure absorption, but nothing that price squawk, voice related to bidding ask reloading yet. It's in the works. Oh, it's in the works, is it? Okay. Like I really like how simple Tick Strike platform is to use. You just turn it on, drag them, have the noises. It's really simple, but that's not the same. It's not the same. Like I would use that for indices, but not for treasuries. And if I'm honest with you, the constant ticking drives me insane. So you need to set the thresholds on it. How did treasuries finish? Did we get any movement at all? Did it pull back a little? Nope. Treasuries does this a lot, where it'll get to the highs. The only market that will literally just consolidate at the highs. Here. all that market on closed data and all the wildness, and it's in the same spot. You've got to love it. So we finished the day 3,000 positive delta. The extended trading hours was 20k, so we're probably going to finish the day like, I don't know, 23, 25k delta plus side. Let's see if they do clear some of it off. We're certainly not breaking 19s, I don't think. Actually, let me jump into this and I'll show you the reason why I didn't short the value area low. So this was the reason when we got to the value area low here, we had this imbalance, and the delta, as you can see at the time, was pretty negative when we got down here, right? Negative 14k. There was a sell imbalance here, nice sell imbalance here, and I'm thinking, you know, like I was kind of expecting if they really put some pressure on it, you know, then we could go down to this buy imbalance. But basically, the news happened when the news came out, and then I was looking to ultimately bid it back up. Was the plan, but of course we just literally grinded straight up all the way back to the highs, and I was, you know, I was like this, watching it. You know, so that was the reasoning. Didn't really want to fade it with so much size coming in, to be honest. And then we had that stop run, I think, that happened here when the market came up and we hit the, I think we hit the highs up here. And if you notice with the stop run, there was 50k, I'm just rounding it, but 50,000 contracts traded in this 15-minute when we hit the stop run, and then we just faded back in. So as you notice, when they say a stop run on treasuries, it's like 2 ticks. You know, it's a completely different. Look, it's tons of volume here actually as well too. Here, 91k. And you see the volume just kind of died slightly off, 25, 16. So yeah. So that was the reasoning. But pretty much since the news came out, we had this, and then the market pulled back. I was basically buying here, up. I took 2 or 3 ticks a few times, and then was buying again, and that was pretty much the session. To be honest, it was pretty quick, and then I shoulda, woulda, coulda, but should have bought this, and then that would have been another good one, but we didn't. So 9 tickaroos. So let me know if you guys are getting any questions, or we'll look to wrap it. Okay, guys. Hope everyone has a great evening. I'd appreciate if you would like to support the channel. If you want to click on the link above, or you can do it through YouTube. That'd be great. If you've got any questions, feel free to jump into Discord and ask any questions. Until then, we'll be on tomorrow. We should have an action-packed day with CPI, so hope everyone please don't hold any trades into CPI. You know, give yourself like 15 minutes or so after it's done, just to calm down and see what playing field happens for the day. No problem, Daniel. But you guys take care, and happy trading tomorrow. Peace, everyone.